Hi to IPO subscribers. Welcome to eaglelive.ai. Today, let us review a main board IPO from Milk Industry Dairy Limited. Here we go on IPO presentation. Before we go on IPO review, let us see what is the financial status of the company, as the financial status of the company is an influencing factor. So without taking the fundamentals into consideration, there's nothing what you can do. Okay, here we go. Here, this is the financial analysis report generated by AI-powered software. Based on the inputs given to the software, this company has been categorized as a defaulting company. Let us see what are the financial irregularities that made the company a defaulting company. Here is the financial analysis. The first is health analysis. In health analysis is solvency. Solvency ensures the sustainability of the company. Here, let us see debt equity ratio is 3.61. High debt, I should say. It's not your moderate high debt. It in general should be 2:1. And next, coming to gearing ratio, it should be less than 3. It is 4.78. Debt to assets ratio should be 0.6. Less than 0.6, it is 0.82. And interest coverage is okay. And net worth to assets ratio is it should be more than 0.34. It is 0.17. So it is so solvency is very weak. Coming into liquidity ensures the survival of the company. Here the current ratio is very poor, 0.72. That means the company has diverted the working capital funding to for investment in some other company. And quick ratio is 0.3, very poor. I should say it is very poor, not even moderate. And coming to operational efficiency, inventory turnover is 6.94, okay, and gross margin is 33.13, so working capital turnover is 13.7, minus 13.75. The reason is that current assets are less than the current liabilities. So coming to financial irregularities, this is the reason why the company has been categorized as a defaulting company. Funds diversion 228.61 crore, shortfall drawing power 228.61, and absence of working out margin 270.89 crores. So that is the reason why the company has been declared as a defaulting company. Coming to EBITDA 435.22, EBIT is 264.75. PBT is 158.49, and PAT is 127.01, cash profit is 297.47, EPS is 1.9, not what you call not appreciable. So EBITDA margin 13.83, in general we expect more than 20, net profit margin 4.05, ROC is 11.73, and ROE is 32.12, book value per share 7.2, very poor, I should say. Cash flow, net cash flow is minus 3.42. Cash flow from operating is 301.79. Market values, say, this is the 140 is the cap price of IPO. And based on that 140, price earning ratio is coming to 70.7. Oh, aggressively valued. Actually, it's abnormal aggressive value. Price to book value is 19.43. Nowhere it is comparable with the regular benchmark ratios. So, coming to growth indicators, of course, growth all are positive, no one is negative. So, this is the financial status of the company. And now let us go on IPO review. Yeah, here is the IPO review. So, Milk Mist Dairy Food Limited. A business overview. Milk Mist Dairy Food Limited is a fast-growing packaged food company focused primarily on value-added dairy products. Product portfolio includes paneer, cheese, butter, curd, and yogurt, ghee, ice cream, UHT products, frozen foods, and ready-to-eat and ready-to-cook products, chocolates. Operates under the flagship Milk Mist brand, along with Smart Chef and Capella and Misty Life. Has also expanded its portfolio through the Brios and Asahi brands. Revenue reportedly grew at 31.26% CGR between financial year 24 to 26. Growth that drives includes urbanization, rising income, health conscious consumption, and convenience foods and quick commerce. Coming to IPO details, total issue size is 1,553. Fresh issue 1,428. Offer for sale is 125 crores. So fresh issue utilization 496.86 crores for debt repayment, 469.24 crores expansion and modernization of Perundar facility, 155.31 crores for coolers and freezers. Balance for general corporate expenditure. Investor takeaway. The IPO provides a meaningful balance sheet benefit through debt repayment while also funding capacity expansion and distribution infrastructure. Right. Valuation. Key investor concern. And at IPO price of 140, EPS is 198, 1 rupee 98 paisa, P is 70.77 and PB is 23.85. Even using the projected growth assumptions, projected P is 42.7 and projected PB is 17 point, high aggressively valued. The valuation is a very demanding and leaves limited margin of safety. No margin of safety, I should say. The IPO price appears to factor in high growth plus margin expansion, capacity expansion, brand strength. Okay. Any slowdown in ending growth could trigger valuation derating. Key investors message. Good business does not automatically mean a good investment at any price. So market sentiments and IPO allocation. Sector sentiment positive. The value-added dairy and packaged food sector has favorable long-term growth drivers. Rising consumption of premium dairy products, increasing health and protein awareness, quick commerce growth, rising disposable incomes, urbanization, growing performance for convenience and foods, improving cold chain infrastructure. IPO sentiment, be cautious. Milk Mist strong growth profile and brand positioning can attract investor interest. However, the high valuation is likely to remain the key factor influencing investor sentiment, of course. So, community investor allocation, UAB is up to 50%, NI is up to 15%, retail investors up to 35%. What investors should watch? QAB participation will be particularly important because strong institutional demand can provide confidence in the issue, while weak QAB demand could reinforce the concerns around the expensive valuation. Retail investors should be cautious about subscription purely based on the company's growth story, given the high PE and PB multiples. Market sentiment summary. Business sentiment positive, sector sentiment positive, growth sentiment strong, institutional interest to be monitored, IPO valuation sentiment negative, overall IPO sentiment cautious. So investment positive, strong value added dairy opportunity, rapid revenue growth, diversified product portfolio, established brand, strong promoter holding, debt reduction through IPO proceeds, capacity expansion can support future growth, favorable long-term industry trends. Key risks, very expensive valuation, financial defaulting concerns require closing monitoring, high competition value-added dairy, pricing pressure may affect my margins, related party transactions require monitoring, expansion, execution, and cost border risks, underutilization of expanded capacity, and the investor health check, business model positive, industry outlook positive, growth potential high, fresh capital impact positive, promoter holding strong, market sentiment cautious, governance monitored, financial risk concern, valuation very expensive, margin of safety low. So final verdict, the first and most important thing is that there is no working capital. No working capital means almost only current ratio is 0.3 that can tell you what is the deficiency in the required for working capital funding. So coming to IPO view, Milk Mist has an attractive business model and operates in a structurally growing value-added dairy market. The company's growth, diversified portfolio, brand strength, and debt reduction are positive. However, valuation remains the biggest investor concern. At approximately 71 current earnings, investors are paying a substantial premium for future growth. Even based on projected earnings, the valuation remains demanding. Finally, investor message: strong business, strong growth opportunity, positive sector sentiment, but valuation is extremely demanding. One line investor takeaway: Milk Mist, good business, high growth, positive sector, cautious IPO sentiment, very expensive valuation. Overall, we caution. Investors should not chase the IPO purely on the grounds of growth story. A more reasonable valuation would provide a better risk reward opportunity. I'm repeating once again, no company can run the business without having required working capital. Here, the working capital what the company is having is not even 30%. So, it is the investor who should take the final decision. So, as always, investment decision should be based on your own financial goals and risk tolerance. Thank you for watching. If you found this analysis useful, please like the video, subscribe to the channel, and stay connected for more detailed IPO and stock market research. Thank you. Thank you very much for watching this video.